Video, and in today's video I want to give you guys an update on the Nasdaq, the Dow Jones, as well as the SNP500. Now if you're new to the channel, a sub would be appreciated as I provide very valuable educational content on a daily basis. If you enjoy the video, please give it a thumbs up as it really helps the YouTube algorithm. Before we get started, I just want to give a special shout out to the members of the channel that we got over here: Mr. Logan, Richard, Yazid, Khoshi, Mr. Jack, Andres, Lungile, Awawoke, Siambonga, as well as Ilya. Thank you so much for the support there, and I hope you guys are enjoying the perks and services that you receive. Also, thank you to each and everyone for taking out the time out of your busy day to watch the video as well, because it helps you at the end of the day. Also, each one helps one. Now, headline over here from CNBC: Dow Jones is down 400 points, but nobody cares really about that. Just yeah, the Dow Jones is down 498 points, or 1.4%. S&P is down 1.79%, and the Nasdaq is down 2.17%. Well, that is the last time it was checked. Well, the last time we looked at it. At the moment, the Nasdaq's down 2.06%, S&P 500 is down 1.64%, and the Dow Jones is down 1.31%. Ouch. Now, basically the main reason for that is again, interest rate hike, anticipating high interest rate hike, which is going to take place within a month from where we are now. Also, investors are a bit shaky about Jerome Powell's comments on inflation on the central bank's annual Jackson Hole economic symposium that's taking place on Thursday and Friday respectively. It's basically a conference where all of these people come together and they discuss the economic situation, what the way forward is going to be. We all know that the investor forecast for interest rate hikes took a massive dip from 0.75 anticipation to a 0.50, and investors think that the Fed could most likely hike those rates probably higher. Now it's funny because we got a lot of other news coming through. Before that news, we got another NFP coming through there as well, but we only here to buy the correction. That's it. So let's just jump straight into the analysis. Now again, here on the monthly time frame, we know that the Nasdaq had printed a massive impulse, a correction to the 61.8, broken below the strong level of support. All of that support was then resistance, and we saw that massive pullback to the downside. Now here on the weekly time frame, we spoke about the market that had printed this overextended W formation. We said we wanted to see a pullback to that leg there as well, and I'll leave it the link in the description to all the analysis that I basically did before there as well. Now once again, here on the weekly time frame, we have this massive impulse, we got that correction, and we can also see we do have a 0.382 that's lining up perfectly with that structure, and the market had taken a massive dip. Now if you do remember, the market was sitting at this level where I told you guys exactly you can just take the sell, and basically that's what the market had did. Now from a daily perspective, what do we see? Now here on the daily time frame, we can see how the market is currently testing a very strong structural level that we have over here. This level over here acted as a strong level of resistance. Market came back to test it as support, and the market's once again here to test it as support here as well. Market printed a massive impulse. So after an impulse, you expect a correction, and you normally expect a correction to at least the 0.50, which is what we could see probably line up here, because a 50% pullback is normally half of what you see over here. Now if you take your Fibonacci from the high to the low of the massive impulse, you can see that we do have a 61.8 lining up there, and there we go. That's basically the 50 I was speaking about. We can see that we do have the 50%, the 61.8 Fibonacci that's lining up perfectly with that structure. Now the best way to approach the situation is quite simple. Now you can't just go into the market and just start buying, because the market is there's a good saying in the market: you can't catch a falling knife, and the market is basically in bearish environment. Now unless you're a price action trader, you'd probably want to just jump into the market over there, but it's very important that you use a set of rules and wait for a proper confirmation before you get into this market there as well. Next up, we've got the Dow Jones. Now if you remembered yesterday, I said the Dow Jones was going to open and the Dow Jones was going to fall to that level, and that is exactly what the Dow Jones had done. So we can now start looking for that pullback to the upside. Now we're going to go straight to the weekly time frame. Here on the weekly time frame, we can see The Dow Jones is currently testing, or is busy basically testing or breaking, sitting at this level of resistance, broke above that, came to test it as support. And you're on the daily time frame. Now, on the Dow Jones, we have to be reactive and not predictive. We have this massive impulse. So after an impulse, you expect a correction. And if you take your Fibonacci from the low to the high, you can see the market is currently sitting at the 61.8 Fibonacci level that is lining up perfectly with this level over here. Now, remember, this is a daily candle and this candle still needs to close. Now, we have to be reactive. There's a high possibility that if this daily candle does close above this level, we can expect the Dow Jones to go up, go complete the gap that it had opened with before we see a continuation to the downside. Now, it'd be good for us to wait and see that the market pull back and then close above that level, and then we could have to start looking for buying opportunities there as well. Next up, we do have the SNP500. The SNP500 on the monthly time frame, similar price action. The market printed this strong level of support, broken below that, came back to test it as resistance, and we can see how the market tested, rejected that level, a massive impulse. So after an impulse, you expect a correction. Then if you take your Fibonacci from the high to the low of the massive impulse, you can see we also have a 61.8 confluence in there as well. On the weekly time frame, we have this overextended W formation. The market's now currently testing this strong level over here. This level over here acted as a level of support, resistance, broken above that. Market's back to test that level once again. This is a weekly candle, so this candle can always close back above that level there as well. Here on the daily time frame, what do we see? Now, from a daily perspective, we can see how the market had just printed or is about to print this information. Now, after information, you normally expect a pullback to the neckline before that continuation to the downside, because an information is considered a bearish pattern from a technical perspective. We also have this massive impulse. So after an impulse, you expect a correction, and if you take a Fibonacci from the low to the high, we do have a 78.6 line up perfectly with that structural level over there. We can also see how the market is currently testing this strong level of resistance, broken above that, came to test it as support. Again, there is a high possibility that the market can go and close that gap today still, and then from there we can once again monitor price action and could consistently see by Friday the market make another U-turn to the downside. That's all from my side. Thank you for your time, and as always, cheers for the years.